If you go back to the fundamentals of everything in the market is a buy or a sell, when we're seeing prices moving lower, we have people taking profits. We have people getting out of the markets, wanting to reduce their exposure. There are some very clear downside targets. If we take a look at US 30, it's like we've got this imbalance in here. US 30 also has these lows. Okay, that could be used as a target. Even if we were to trade below here and come back down to 28,000, that would still not invalidate the possibility of seeing an extension to new all-time highs. Even if we were to get all the way down here towards 27,500, that major quarter, that would still not completely invalidate the possibility of us seeing new all-time highs. Something that's worth noting, with US 30, we had the all-time high, right? This whole area being the old all-time high. So all these equal highs, right? Nice little clean target. But what actually happened with US 30, okay, if we take a look at the all-time high, compare it to the high that was made this week on Tuesday, we had this lower high come in. If we compare that with S&P, here is its old all-time high. Okay, and then on Tuesday, we had a higher high. NASDAQ, same thing. Old all-time high. On Tuesday, we had a higher high. And so we had the high of the week for NASDAQ and S&P 500. It was set on Tuesday during Asian session, right? And then we ultimately saw some weakness in the market and things really started to sell off into Thursday and the continuation for today. So isn't it interesting how NASDAQ had a higher high, S&P had a slightly higher high, and US 30 had a lower high? The weakness that we were seeing in US 30, whether you're new or if you've been here before, what is that called? Okay, what is the terminology where commonly correlating assets like the S&P, the NASDAQ, and the US 30, what happens when the correlation breaks and the markets show us different things within the price action? I want to test you a little bit today and see, where your understanding is at. The significance of this, making a lower high in contrast to the S&P and the NASDAQ, what we need to understand about the indices is that something like the Dow Jones, okay, the US 30, it is a index of 30 different companies that are traded in the New York stock market. Those 30 companies are also a part of the S&P 500. They are also a part of the NASDAQ. And so even though the S&P is looking at 500 companies and the NASDAQ is looking at 100 companies, seeing weakness in one part of the market, specifically the Dow, because the Dow is one of those things you hear a lot of people talk about. You hear Trump talking about Dow 30K. Majority of the time when you hear people talk about look at how well the market is doing, they're referring to the Dow. Okay, and we'll talk a little bit more about why they do that in just a minute. Before we get too ahead of ourselves, divergence. Yes, it is divergence that I was looking for when we talk about prices that generally correlate doing separate things in the market.
Yeah, that was a really powerful example this week for sure.
But the significance of the Dow and why a lot of people talk about the Dow when you hear about look at how well the market is doing, okay, it includes a lot of big companies. So companies like Chevron, IBM, Microsoft, Boeing, Verizon, Cisco, okay, Caterpillar, McDonald's, Goldman Sachs, Walmart, American Express, Disney, Apple, Nike, Visa. These are all common brands that most of us interact with on a daily basis, at least one of those brands that I just listed. And of course, there are a few more companies. I didn't name all 30. It's very easy to find the 30 different companies that make up the Dow Jones. But just to bring this all together for you with this example that we saw this week of divergence in the markets and weakness within the Dow 30, okay, seeing that weakness play out with the lower high being set, okay, it was the first sign of weakness. It was the first indication that we could be seeing some profit taking and bearishness into the end of this week. And it was very, very nice that this set up in the middle of the week. Really powerful example of divergence that I would encourage you to go and backtest, right? Go and study it if you have any interest in trading the indices. There are many ways to identify divergence. Some people use indicators like the RSI or the stochastic or the MACD. Right? You can use indicators to identify divergence, but you can also use price. Right? And to put it in the most simple way that I know how, okay, divergence is when assets that generally correlate and move in a very similar fashion break the correlation and start doing different things. And so this was a great example because with the three major indexes for the United States moving in the same kind of way for the last decade, okay, even longer than that, to see that correlation break with new all-time highs being made on the S&P and the Nasdaq this week, but we didn't get that on US 30, that can be a very powerful indicator for us without using an RSI or a stochastic or a MACD or whatever other tool you could use to identify divergence. Okay, it's a very powerful indicator just by simply observing price and noticing what the candlesticks did. And I'm not sure if you had anything else that you would want to add on to divergence, Jordan, but I feel like that's the best way that I can explain it in like an easy to understand way.
Yeah, it's things that are supposed to move in the same direction. And when it's not moving in the same direction, there's something happening. They're diverging. They're not doing what they're supposed to do. And so now we're investigating why. Why are they not doing what they're supposed to be doing, going in the same direction? Just to keep it, short, sweet, plain and simple. Correlated assets like euro and GBP, those are supposed to go together. Euro and dollar, those go the opposite. AUD and NZD, they run together. Gold, silver, they run together. And when all of a sudden they're not going in the same direction, the reason why is because manipulation occurs, and we can spot that. Because why does manipulation occur? Because they got to, big traders, they got to um, send price towards liquidity so they can help fill their orders, and we can pick up on that manipulation. And sometimes you can spot divergence, what'll help you tell you the direction that price is more than likely going to go.
Just because divergence exists doesn't mean that it's a confirmation of, all right, we're going to take a trade on this because price is doing a certain thing. You obviously need to overlap other confirmations with it, such as we had weakness in US 30 with that lower high contrasted to what we saw on S&P and the Nasdaq, right? With them both making higher highs. But look at how price action played after the divergence was present, right? Look at how price, we'll start with S&P 500. We had the higher high, okay? These 3 consecutive bullish candlesticks that brought us up prior to the initial selling evidence, profits being taken at the new all-time high. Okay, so we had that, we saw that, right? You can all see that very, very easily, whether we're looking at an hourly chart, whether you're looking at a 4-hour chart, okay, even though it's a little bit different, you can still see that price clearly came up, wicked to a new all-time high. Look at the body of that candle. It was a lower move than where the open of the previous bearish candle was. Okay, if you're looking at a 15-minute, still the same thing, right? You can see that price came up, made a new all-time high, and then slammed down. NASDAQ, same thing, right? Even though its all-time high, the new one, was a little bit higher than where the past structure was compared to S&P. S&P just barely broke it, whereas NASDAQ traded beyond it by almost 100 points. Okay, it was the same thing. We had price 3 consecutive candles, and then we see this nice big bearish engulfing candlestick, first sign of weakness. Market comes back down, retests the old structure. Okay, and then over here with US 30, we get that push into the gap. Okay, even though the imbalance isn't visible on this chart, if we were to take a look at the futures, it is. Okay, so there's the imbalance. You can see it. But look at what happened at that same time during Asia over here. Right? 3 consecutive candles, big bearish engulfing candlestick to indicate the possible market structure shift. Now, coming back to S&P, because that's where we started, we had imbalance. Look at where price came back to retest during London, right? We sold off, we started seeing that first sign of weakness. Market comes back up, makes a lower high. NASDAQ. Market comes back up during London, makes a lower high. US 30. Market comes back up during London, same time of day, same structure at this point, makes a lower high. So there were signs of weakness in the market spotted by the initial divergence. US 30 did not make a new all-time high, whereas S&P 500 did, NASDAQ did. After that happened, the correlation resumed again. We got a lower high on NASDAQ, lower high on S&P, lower high on US 30, retesting that last bullish candlestick that moved up prior to the engulfing forming. So lower highs across the board. Back to S&P 500. Look at where we are at for New York. New York open, we get a push up. Where do we go? We retest the structure of that lower high, and we get another lower high as we're heading into New York. Very weak candlestick close on S&P. NASDAQ. Here we are at New York open. Here's that past structure. come back up, we retest it. Not only do we get a weak close on the S&P 500, we get a bearish candlestick close on the Nasdaq. More evidence of weakness in the market. Lower high on the Nasdaq, lower high on the S&P 500, bringing it back to US 30. We retested the structure of that London session candle. Here we are in New York, bearish close, lower high. Do you see it? And then price takes out a relative low. Price takes out a relative low. We could look left and we could find other things in here. Price takes out a relative low, relatively equal lows, a target in here. Okay, so the assets have resumed correlation, and the intraday price action showed us that. Initial break, the evidence that there may be weakness in the market. Confirmation, confirmation within the price. Right time of day, near the end of the week. And then once we had that market structure shift happen and we had the incredibly bearish day that we saw yesterday across the board on all the indices, what do you need to expect for today? More profit taking. Okay, so it definitely takes time to be able to piece together the price action. What is it showing you compared to what you understand? And the indices, like I said, today was a really, really, really powerful example of divergence. And so hopefully you have the opportunity to learn from it and experience it and notice some of these things prior to me even talking about it. If you were doing your own back testing or you were looking at the charts this morning or whatever it was that you did, if you were able to make even some of the observations without necessarily picking up on all of the things that I just pointed out, the fact that you're able to identify some is really, really great progress, right? Compared to wherever you were even at the beginning of this year. The fact that you're picking up on some of the things, some of the evidence is a testimony in itself to the time and the effort and the energy you've been putting in up until today. And then, of course, we have downside targets we can consider, but today is Friday. Market's closing in an hour and 20 minutes for Forex. It's going to be closing in less than an hour for stocks and the indices. I'm not looking to take any trades. I'm not in anything and don't plan to enter anything for the sake of holding it over the weekend at this point. Okay, so come Monday, fresh week, see where the market opens. I'll reevaluate and go from there. But this ties in with that question about backtesting and looking at over your plan and what do you do? What are some tips? Just making observations like this, right? Having chart time, getting your hands on the charts, marking it up for yourself. It's one thing to come here into class and to have Jordan or to have myself or to have any of the other educators on Go Live show you what they see through their eyes and from their understanding of the market environment. But it's a completely different game once you start making those observations. When you're the one marking up the charts. When you're the one showing up to class, and before we even pull up a chart, there were quite a few of you who dropped things like this in the chat, pointing out some of the target areas that we've been talking about. And so we never know if price is going to go a certain direction with 100% certainty, but the people that are trading large amounts of money, they can do their best, but they cannot completely hide their intentions of where they're looking to move price. Okay, and retail is also involved in that. Is trading your passion, is trading a passion. How do you know? It's the fact that you're willing to show up to class, the fact that you're willing to learn more about it, the fact that you're willing to mark up your charts and demo trade and do the things every single day that are going to compound and contribute to you becoming better.
This is the example right here. We were looking at this, and so y'all already had a lesson over the divergence, so y'all know the direction. Okay. The sell, right? This is filled. The gap was filled. So looking for sells. Right. Zach showed you all the institutional candles, the divergence and all of that, but what was the area that we were really attacking and playing in, right? And it's the same thing. It's the next institutional candle, but you got to go really deep inside it. And when we go to the 5 minute, okay, this is the area that that we were watching. Okay. And yeah, so inside all of this, right? And so it's just to delete the box. You can see, and you can go to a bunch of different brokers and just how, I guess the difference. Remember when you get so accurate and precise and detailed where we're looking at in these markets, the order books are slightly different in these areas. And so this is a good example. I found it different on uh, the offshore laggy little third party brokers like KOTC or Hugo's Way or JFX or any of those brokers. This price actually comes up and hits this candle right here, right? That last up candle before the sell off that made that imbalance that we're looking in, see on the 30-minute. Okay, and so this was our focus area. So more things to point inside that area was the double top. Okay, where liquidity sits, that nice M pattern during London session. Okay, and so I gotta come to replay, or I'm not gonna be able to adjust it because this downside is so volatile. Okay, so this is the price action that we want, right inside here. Okay, becomes a lot easier to see on the 3-minute and 1-minute. But this is, right? Think about it. You're paying attention to the imbalance. Inside that imbalance, you have what? The institutional candle. So what we're saying is imbalance was filled. You had your first reaction of the institutional candle. So that's how you know you're right here. And then you had the next reaction. And so when the stair step is literally right here, okay, this is everything we look for, right? Hour institutional candle comes up, revisits. Another hour institutional candle. Inside that institutional candle, there's imbalance. So obviously a lot of volume on sales happened, obviously. Same as this. Look, see how it comes back and visits that last institutional candle. It's right here. Closes in that imbalance a little bit, right? Closes in halfway. Okay, so it's obvious that sell orders are happening or these big gaps will not print. If price was going to respect this, you would see it respect on a small time frame. And this was it. Distribution. Okay, and so it was like It's not, trying to guess. It's watching inside a particular area, and that's what we highlight to everybody in bounce back. We highlight particular areas that we want to watch and see price action, and then we scroll inside of those areas. So uh in bounce back, for instance, we'll send you like an institutional candle that's on the hour. Okay, maybe it works, maybe it doesn't, but what's going to tell you if it works or it doesn't is the 1, 3, 5, whatever small time frame price action can make sense. You're looking for the accumulation distribution to happen, and it happens right there. Okay, and you can literally see the candle that what breaks structure, right? Think about it. Comes down, starts breaking structure. What does Zachary say? Right? It's going to open and close higher or lower, right? Do you see it closing lower? I see it closing lower. I see the black candle right here that closes lower. Okay, and so what do? Go look at the last up candle before a down move that captures liquidity, and you can see it. See it? See this last candle that captures liquidity? Okay, now watch. Do you see the imbalance that was made? Okay, and so there is your entry candle inside all of here. So how whatever the spread ends up being, when you enter, doesn't matter, all of that stuff. And this is how we can really justify and crunch our risk and maximize that reward. Okay, and y'all know about, right, the fall, but I mean that's what we're doing. That is the only way to really dive in and maximize that reward, crunch that risk, because you know that we can lose 1, 2, 3, 4 times, and then you hit it. That makes up for all those losses. Okay, and so this is the super super powerful way of being able to stay out of trades that don't work, knowing the ones that are going to work, and you're just being patient and waiting. Okay, and I really ask that you go back test on some brokers and just go find how accurate this area right here was. It didn't hit us here on this broker, but I want you to go look at this candle on the 15-minute right here. Go look at that imbalance that I just marked, and you'll see that on some brokers it smacks it perfect right there. It just kisses it, just right? And that's what you're looking for. Everything is pointing towards that direction to the downside. It's finding that entry. All we know was that buying up to potentially raid the direction, and then the entry was going to be somewhere inside here, and it was waiting for the breakdown, and that was it. Right? And that is all we are doing, is we are breaking down why something should move, what's indicating and giving us those uh, reasons why we're speculating in that direction, and then we go and we look for the price action to tell us where we should enter, because that's how we are going to that's the only way, guys. If you're not doing it this way, you're guessing on your stop, and that's going to slow down on what you can yield. Okay, we don't guess. You're waiting for the markets to tell you what it's going to do. Okay. And so I thought that was a great example that turned out yesterday live. We didn't get to see this part turn out live, but it was what we were telling people to look out for. Look out for distribution inside this area. Whenever you can find it, push the trigger, and there it was. And then why price should break up. is because remember there's multiple sessions and lots of people sell right here because they think that M's and W's work, and they do sometimes. They work enough to convince you that they work. My broker hit the wick perfectly. Yep, see? And I'm telling you, like, order books are different, but the characteristics are the same. And, some order books will give you that extra sauce that you just need to know the direction or entry. Some brokers won't. And so when you're looking, look around for a couple different brokers. I've got like 6 on my phone that I keep an eye on. I like brokers like Hugo's Way, KOT, JFX, all those because they're unregulated brokers and their data is different than the regulated brokers. And sometimes one broker or the other is missing a piece, and we can find that piece, like a certain gap or a certain candle, right? And I'll leave it off with this because this just popped in my head. This one, this candle looks so different on so many brokers, but on a few brokers, it was perfect. That one right there. So you can go read it. AJ, same thing. FX Choices broker was perfect on it, but some brokers like, the third party or the unregulated ones were not. And just like this one was kind of hard to read with this candle, right? It worked. You can read it, but on some brokers, it just made it so simple and perfect and easy to read.